Is the Middle East finally moving away from the brink of a wider conflict? Global oil prices have dropped sharply after the United States and Iran maintained a second consecutive day without major military action. The pause in fighting has eased fears of a prolonged regional war, giving financial markets a boost and raising hopes that global energy supplies could stabilize. Here's what the latest developments mean for oil prices, the stock market, and consumers around the world. For weeks, investors have closely watched the conflict between the United States and Iran, fearing that escalating tensions could disrupt one of the world's most important energy-producing regions. As military operations intensified, oil prices climbed rapidly, driven by concerns that key shipping routes could be affected. But now, signs of a temporary pause in the conflict are changing the outlook. Global oil markets reacted immediately to the latest developments. Brent crude, the international benchmark for oil prices, dropped by more than 8%, falling to around $88 per barrel for September delivery. Another actively traded Brent contract for October delivery also declined significantly, settling near $85 per barrel. Meanwhile, U.S. benchmark West Texas Intermediate crude fell by more than 7%, trading at roughly $82 per barrel. The sharp decline reflects growing optimism among investors that the situation in the Middle East may avoid a larger military escalation for now. Despite the decline in oil prices, uncertainty hasn't disappeared. Analysts continue to monitor two of the world's most critical shipping routes. The first is the Strait of Hormuz, a narrow waterway through which a large share of the world's oil exports passes every day. The second is the Bab al-Mandab Strait, located near the entrance to the Red Sea, where shipping security has become a growing concern. Any disruption in these strategic waterways could quickly push energy prices higher again. Financial markets welcomed the easing tensions. U.S. stock futures moved higher, signaling a positive start to trading on Wall Street. Asian markets also posted gains, with major Chinese indexes rising by more than 1%, while Japan's Nikkei index closed higher. European shares followed the same trend as investors became more confident that the conflict may not escalate further in the immediate future. Although crude oil prices have fallen, drivers are not seeing immediate relief at the pump. The national average price for gasoline remains above $4 per gallon, while diesel prices continue to stay significantly higher than before the conflict began. Experts explain that retail fuel prices usually take several days to reflect changes in crude oil markets. If lower oil prices continue, consumers could begin to see cheaper fuel in the coming days or weeks. The recent drop in oil prices shows just how sensitive global markets remain to events in the Middle East. For now, the pause in fighting has provided investors with some relief. However, any renewed military action, threats to international shipping routes, or breakdown in diplomatic efforts could quickly reverse the current trend and send energy prices climbing once again. As negotiations continue and the situation develops, markets around the world will remain focused on every new headline coming out of Washington and the Middle East. That's all for today's update. Do you think the ceasefire between the United States and Iran will last, or could tensions rise again and push oil prices even higher? Let us know your thoughts in the comments below. If you found this report helpful, please like this video, subscribe to the channel, and turn on notifications for daily updates on U.S. politics, world affairs, and breaking geopolitical news. Thanks for watching, and we'll see you in the next update.